Hello there, this is James, and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. And happy Thanksgiving if you're in America. In today's program, I want to discuss what the markets are thankful for, tying in Thanksgiving, after last night's FOMC minutes. Plus, a couple other things the market should be thankful for so far this year, and an open discussion about Manchester United, which is up for sale. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand for entering any trade. With that out of the way, let's get started. So indeed, yes, indeed, we all know it's Thanksgiving today and the US markets are closed. So happy Turkey Day to those viewers in the US. I hope you have a great day. But the market has sort of got a little bit of, a few things to be thankful for, especially after yesterday's FOMC minutes. Now, don't forget, the markets have been sort of slightly on the up ever since we had that lower than anticipated CPI reading, because they're generally feeling that basically the FOMC or the Fed in December will start to slow down their aggressive interest rate hikes. Don't forget, they've done 4.75 back to back. And the market is basically sort of gotten the impression that they're going to be expecting 50. So this is what they're anticipating. This is what they've been hoping to see. And thankfully for them, the minutes have practically confirmed what they thought, because they did show a substantial majority of the Fed support slowing the pace of rate hikes. This is what the minutes had to say. A number of participants observed that as a monetary policy approach, a stance was significantly restrictive to achieve the committee's goals. It would become appropriate to slow the pace of increase in the target range for the federal funds rate. In addition, a substantial majority of participants judged that slowing in the pace of the increase would likely be sooner be appropriate. In other words, bye-bye 75. Bye-bye 75. Again, I must underline this. The market has been expecting this. We were looking at this and pricing it is. Enough Fed members have already said, it's Fed speak, about it. Okay, so they are anticipating this. But the only reason why this was such a big deal is because it underlines the fact that they're right. The Fed's going to do it. Now, the one thing, though, it did say, which the market is not paying attention to at the moment, because I'll talk about the market reaction on the back of these minutes in a second, is that it did also say in these minutes that they may need to raise higher, not per increment, but get the overall inflation level higher than anticipated. So obviously the market has already been thinking 4.75, then maybe 5%. But they're even saying that the Fed might even need to go higher than that to get to their target of 2%. And here's the thing, don't forget, James Bullard, 2 weeks ago or a week ago, he said that he could see interest rates in the United States ranging between 5 to 7%. Which the market had a panic, but it forgot about. So the question is, how high can they go? But they said in the minutes that this is, something they need to consider. But anyway, they've all ignored that. They all focused on the substantial majority going for lower pace interest rate hikes. So they're thinking 50 December, 25 in January, and so on. So it is priced in. There is something else the minutes also said, which the market is again sort of ignored. And that was basically the general consensus. There's a 50-50 chance of the US falling into recession. That's what the Fed said. 50-50 chance of a recession. Now, the way I see it as well, the market could look at this saying that at least they're acknowledging it, because they haven't been acknowledging the threats so much, but they're beginning to acknowledge the threats. It's not like the Bank of England, who was been open and said, yeah, the UK is in recession. To be fair, the US and UK are totally different. In totally different situations. So they are finally admitting there is a danger. So again, this could be giving the market the impression that, yes, they're going to do low increments. They know there's danger of recession ahead, which means we're going to get a pivot. They're going to get a pivot at some point, maybe sooner than we thought next year. So that could also be giving, because the Fed's never admitted there might be sort of, issues there. They've always said they've had a strong labor market, which has changed, which I'll bring into in a minute. Market reaction to these minutes in a couple of words or several words. There was much rejoicing on the back of this. In fact, US equities closed at a 2-month high on the back of this these minutes. So let's have a quick look at the market now and see where we are. Let's start off with the euro. Again, like I say, we're seeing weaker dollar, much rejoicement in the market. Euro currently trading at 1.04241. If you look at on a bigger picture, now this has been a big turnaround. We are trading just above that 200-day moving average, which is potentially, if we stay above that, it gives it a potential area of interest around 1.3853. Moving on to the sterling. Let's face it, this sterling's comeback is incredible. Look where we were under trust a few months ago. Okay, record lows. There was talk of parity with the sterling. But since obviously the change in government, happy Turkey Day. Yeah, happy Turkey Day. No problem at all. Happy to. Hope you're well. Happy Turkey Day indeed to the Americans. The total turnaround. Yes, okay. Obviously, the new government is giving a bit of stability. But again, there is a cloud storms growing over the UK. So, like I say, this is really purely down to a bit more risk appetite, the rejoicement of the minutes, and weaker dollar. Again, we're trading just below that 200-day moving average. Key area of interest for me is at the moment is 1.2109. So I'm going to keep a close eye on that. Dollar yen, total turnaround for the books as well. Don't forget we're still above that 200-day moving average. Okay, but it's been on such a long bull run against the Japanese yen. We're now way under the 140 handle, currently trading at 138.29. So again, yen is rejoicing. If we go to gold, again, gold. Okay, we've had 4 days of losing streaks. Managed to find a bit of support around the $1,726 level, which we've been keeping an eye on. Has retraced back from that and has rejoiced on the back of the minutes. However, it's still capped to that 200-day moving average as well, which is key. This 200-day moving average is key for so many assets now, if we look at it. So key area of interest for me, 1,759, where we're just under at the moment. S&P 500, above 4,000 points. Above 4,000 points. That's been a challenge. Look how many sessions it's been testing that 200-day moving average. We're at the moment trading just above it. So like I say, this has been good news. This is what the markets are thankful for these minutes at the moment. So just to try above that. So key area for me, 4,018 points, if we can stay above that on that. And we can see this with commodities as well. Commodities in general are beginning to benefit, other than oil, actually. Oil, which we'll look at now, is come under pressure, obviously, because we've got the China concerns, the lockdown concerns. They had new record numbers over the last couple of days. So again, that's weighing on it. But the market in general, a lot happier on those minutes. And I'll tell you why I think we're seeing a bit of this. And I'm not going to say now that the market has touched the bottom. It's touched the bottom. It sounds rude. Hit its bottom. I'm not saying that, but I'm beginning to see signs that maybe, just maybe, we're beginning to see the market turn around. And I'll tell you why I think this. It's because and this could all change as well. Again, this is just an opinion. It's something I just want to share. The reason why I think is that the more and more we see evidence of in the future there being a pivot of them reducing rates, the market will start to jump in a bit more every time we see a little bit more evidence. Not because I think, and I'll tell you my reasons for this, not because I think as soon as we get the pivot, the market will skyrocket. I think the opposite if we do get a pivot. Because as you got to remember, traders in general and institutions, they look months ahead. So this where we might start seeing the market changing its attitude and start to jump in now before the pivot. When the Fed does the pivot, then we can see the market start to crash again. And I will do a special episode on why I think that, because I'm looking at a track record of Fed's pivots over a period of years. So I just think this is what we could see. So I'm not saying we're at the bottom on the bear market is totally over, but I'm beginning to see signs that we could be getting that way. And the reason why I think that what things could change, it depends on that CPI reading. That CPI reading next month, and obviously the job number, the US initial claims as well yesterday. And I'll talk about that in a different segment in a minute, which I think is something else. But job number next week and CPI, that could see what they can come. If we get a higher than expected reading, it was a nice surprise, but let's see. Again, like I say, I'm not sure. I mean, I don't know. I'm not sure. Again, it could all change next week. If we get a strong job number next week, then that could change the momentum of it. Good question, by the way. Good question. And don't forget, today, obviously, we have Thanksgiving, so the US markets are closed. So we have that. Like I say, I'm not sure how long this happy feeling is going to stay. I'm not 100% sure that the happy feeling is going to go away straight away. Like I said, I'm not saying we've hit a bottom, but I'm beginning to think that we might see signs of that happening now. I really do, but it can all change on that CPI reading and NFP. I think the happy feeling for certain currency pairs, euro and sterling, I think that will go, won't last as long, definitely. In other news I want to talk about, other things the market should be thankful for. It's Thanksgiving, so let's do a segment on what the market should be thankful for. Why not? For the US, I'm talking about. No recession in the US yet. No recession in the US yet. That's something they should be thankful for. Everybody was anticipating the US would be in recession by the end of this year. They're now thinking maybe end of next quarter now. I think it's going to be not so, a bit further away. So they should be thankful they're not in a recession yet. Don't forget they've had experience of really aggressive rate hikes. Okay, UK is in recession. EU will be falling into recession. Yes, but the US is not in recession yet. But though they should be thankful for it, incoming US initial claims yesterday was announced at 240,000. That's a 3-month high. And don't forget, I always say US initial claims is a canary in the coal mine. It's early warning sign. If you start getting a big increase in initial claims, then it's telling you you're on your way. Look at all the redundancies in the tech sector, the disappointing earnings. It's on its way. The question is it going to be soft landing or medium landing, and question of when. But at the moment, markets should be thankful that they're not in recession yet. Second thing, the tech collapse. We've had a huge tech collapse so far this year. Massive. Meta, Amazon, Apple, Netflix, Google, all lost billions in market value. So why should that be thankful for that? Well, the reason why, because, lesson learned, first of all. Both the problem with Meta and a number of these companies, they've expanded far too quickly, in the sunshine. Well, you see what I've done there? I see. I'm trying to spin it in. There's a good point. Yeah, but there you go, exactly. That's the idea, but thank you for noticing. My little connection. But anyway, like I said, Meta, Amazon, Apple, Netflix have lost billions. So why should they be thankful? They learned the lesson, first of all. Lesson to be learned. Meta expanded massively. They started with a force of 89,000. That's why they had to let 11,000 go. And the market is changing. So they are learning the lesson to expand. But more importantly, because the prices are dropping for them as well, there is sign for growth in the future, in the coming years to come. So again, bad year, but be thankful for what they could possibly do in the future. The other thing the US should be thankful for at the moment, which again is questionable, inflation is finally coming down. Is it? Is it coming down? Yeah, in the US it is. UK is not. Germany's not, Italy's not, France is not, but I'm talking about the US. They should be thankful for. Yes, there was that sign of that year-on-year 6.6, core still at 6.3 though. So that's one thing which is always something to be aware of. But at the moment, they should be thankful that inflation shows signs of it coming down. Again, that thankful feeling could all change come next month with the CPI. But yeah, for now, they should be thankful that inflation is finally coming down, so things could start maybe being cheaper for them as well. It's slowly coming down. This is the question, is it? It's a very good point. This is my point. 7.7 year on year is, but that's motivated by energy. Core is very slowly. Core is very, very, very slow. They will keep going. They will keep going. They're not going to stop, but they do smaller increments, smaller pieces instead of doing the big ones. Big ones, like they said in the minutes. They'll do 50 next month, 25 in January, possibly. So that's something else they should be thankful for. But there's something else I want to have a quick chat about, which is close to my heart, unfortunately. Not unfortunately, but close to my heart. And it's following what I did yesterday. And as we know, is Man United, one of the biggest football clubs in the world, is for sale. And we'll look at their share price. Obviously, they're not trading today because the US is closed. But we'll look at their share price and their activity over the last couple of days, which has been amazing growth in the share price and their market cap. Actually, the market cap has gone up since this news announcement. But then it does make me wonder, makes me question, and is it going to be a hard sell? Is it going to be a hard sell? A couple of years ago, quite possibly not in the market. But obviously what we've seen with the tech companies as well, and there's a lot of tech companies looking at football clubs for live streaming and things like this, look at how they've suffered. I think it might be a harder sell. It's currently valued at 6 billion. So, Chelsea sold for 4.25 billion. So United are valued at 6 billion. It's arguably a bigger club than Chelsea. That's true. But I'm beginning to think things are changing, and it's going to be getting very, very difficult to sell. Jim O'Neill, who was part of a group of investors who tabled a bid 10 years ago for 2.5 billion for the club, is a lifelong Man United fan as well. He's out because he thinks this is the bad time, because any investor going in, you need some, return. And he's looking at, if you invest in Man United at the moment or buy Man United, especially at 6 billion, then it's going to take you a long time, if any, to get your money back or your investment back. And the question you have to ask at the same time, why is both Liverpool and Man United for sale? They're two, undoubtedly. I wish. Do you have spare 6 billion? I'll check behind the sofa, see what I can find. And I can see you're a Man United fan too. But the question is, why is both Liverpool and Man United for sale? The two of the biggest, if not the biggest, clubs from the UK or in Britain, two the biggest clubs in Britain, no doubt, no argument, the biggest clubs in Britain, and two of the biggest clubs in the world. Why are they both for sale? Why are they both for sale? Which goes on, the only way, the whole climate has changed. The only way you can really compete is if one of the big oil consortiums buys you, like who bought Newcastle or Manchester City or Paris Saint-Germain. These clubs are basically practically owned by countries now. So you need to be that. So I really generally think the future of the football industry is changing. And I think we're going to see a lot of changes in it as a business on the coming years. And I think it's going to be a very interesting thing to watch. And I think maybe the golden days are maybe beginning to come the end as a business opportunity. So that's something, that's something which is going to be really interesting. But let's have a quick look, because I pulled up Man United today. Obviously, I've been looking at them since obviously its announcement, and it is. I mean, this is on a daily. Since the announcement. I mean, yesterday they closed nearly 12% higher. In general, since the announcement, they've been around 24%. Look at them. They were trading before the announcement around $12.95. Since the announcement of the Glazers selling, they closed yesterday at $18. If we look at it in a little bit more of a shorter term period, you can see obviously the excitement in this, but I'm just thinking it's going to end up being, and like I say, their market cap, it was around 2.4 billion, I think. When I was talking about it, market cap yesterday, with obviously the increase in price and the little bit of excitement led to it, is around about 3.8 billion now. So even that's increased. So it's interesting to see how this unfolds. But I think this movement with Man United, yes, I am a Man United fan as well. Don't hold it against me. But I think this is interesting. I think this is going to be an interesting story to watch. I really do. Yeah, again, Barcelona is struggling because the Super League failed. All the clubs that sign off the Super League are not owned by oil companies are going to struggle. And it's a silly idea, the Super League, but that's what they were all backing on, and that's what's failed. That's why all the big clubs are struggling. But anyway, this is my little 2 minutes about Man United. But anyway, European session, how it could have stand still, rejoicing from yesterday. FTSE currently in the green, 0.21. DAX currently trading 0.62%. Eurostock 50 currently trading 0.56%. Don't forget, you can ask me questions anytime you wish, or say hello. Like I have a few questions here. I mean, I don't know if you're American, what are you thankful for? And like I said, the markets today are thankful for the FOMC minutes, confirming pretty much what they already knew. But again, it's given them a bit more hope that at some point a Fed pivot will happen. And I will do a little bit on what I think will happen when the Fed pivot happens, because I think we might see a bull run up until that point. And when the Fed pivot does it, then we might see the opposite direction. But anyway, that's a different thing. Don't like I say, don't forget, if you think of a question later, you can put it on either in the comment section, either on YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which will be a little bit time this afternoon, around 3 p.m. UTC. Obviously, the US session is closed, so I won't be able to talk about that. But I'll talk about a couple of other interesting things in the European session. Obviously, the market is open again tomorrow, but it closes earlier, the US does, than usual, so we can expect liquidity to dry up or be a little bit tight on that. So bear that in mind. But I will still be going on at 3 p.m. UTC to discuss a couple of other things. Don't forget that. Hashtag Ask James. Yes, indeed. I forgot to put it on this video. Good question. Good point. I will be doing one tomorrow. Actually, a new hashtag Ask James at 1:30 p.m. UTC. Don't forget, the hashtag series is different from the Tixee Live. So at Tixee Live, we talk about the market a lot more, what's going on. Hashtag Ask James are pure educational, where basically you good people send in a topic of your choice. I will discuss, I will then dedicate a whole video just to that topic. Of course, it's live, like, Tixee Live, and live means live, so it'll still be live, so we'll be live. But that'll be tomorrow, 1:30 p.m. UTC. The subject tomorrow is market sentiment. So please come along and join me for that. Okie doke. If there is no questions, nice one, James. Thanks a lot. I'd be interested in how next week. So yeah, I'd be really fascinated. Like I say, it'd be nice to see when the US opens properly come Monday. That would be interesting to see. Yes, they're back in tomorrow, but it's going to be slightly quieter because they're still going to be enjoying their weekend. So it'd be interesting to see. But yeah, I'd be interested to see how that pans out tomorrow. Especially next week, we have the NFP as well. That's the major event, which I will do a watch along on that next week. And thanks. No problem. Thank you ever so much. So big shout out to SMF 790, IT 1987. Thank you for your contribution. Thank you for saying hello. And a big thank you to all of you for coming along. I really appreciate it. Anyway, like I always say, if you're watching me on Facebook and you enjoyed this whole video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this whole video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, find it interesting and useful, and you put up with me, my over-the-top enthusiasm for the markets, I simply just cannot help. Then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.